Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Great to see everybody here. All right, so a couple things to kick off our show. And we've got to start at this ridiculous economic calendar here today. We already had retail sales come out. We'll talk about the 8:30 reaction here in a moment. But get past the cap utilization that's coming out in 14 minutes. Get past the NAHB housing market and business inventories. Very low heat, hot zones at 10 a.m. Eastern. And then at 11:10, if you have exposure to the dollar as I do, if you have interest in the euro as I do, remember 11:10 a.m. when the ECB president speaks, this has a very potentially high impact on the US dollar because the euro will be in play. And that's the way those two currencies move. And then take a look right around noon, right during those lunchtime doldrums, we are just going to get barraged over the next, I guess, 2 or 3 days by FOMC members speaking. My gosh, you typically don't see this many speakers concentrated at a specific time or for as prolonged a period of time as we will have this week. So heads up, keep the Dramamine handy, and you can see just how the whole week unfolds with member after member after member going right into Friday. So keep that in mind. Gold will be in play, dollar will be in play, euro will be in play, interest rate products, of course, right? So that's the week. Holy cow. So just be aware of that. And keep an eye on the economic calendar so you're not blindsided by these hot zones, by these scheduled events that have the potential to really kickstart volatility. Okay, so good morning. Great to see you all. Get those questions in and let's dive in. So the first question is Comcast. Sure. Hey there, Ann. First question is Comcast. So Comcast is interesting. It's weighted within the XLC. It's weighted within the IYZ. And both those are, when you look at the broader markets, both those are relatively weak corners of the market. So then you dive into Comcast, which is an individual boat in those tides, and the previous trend was down, and we're currently sideways. So let me just say something about shorts in general at the moment. There are some of them, and they're usually happening in the communications corner, telecommunications, communications, IYZ, XLC. However, if the overall tide continues to move higher, remember that these downtrends, while clearly in place, are going to have to fight that larger rising tide. So I'm not prioritizing shorts. However, to just simply answer the question and not necessarily in any way suggest that my book is full of shorts, it's not. Yes, it's valid as a short. I'd love to see it retest the 200 propulsion. And yeah, if you're looking for corners of the market that are potentially going to move to the downside, that would be clearly Comcast would most definitely be one of them. So if you're looking at a daily short, good eye. I mean, that's really where, again, if that's what you want to do. But I really want to make it really clear. I'm not interested in that. Oh, another thing I want to mention is you had a beautiful volume ledge right there at about 54, and the 200 sitting at about 54.70. So yeah, that's a good looking short. Okay, next up, C. Scott. Good morning. Do I have any pointers on handling an entry when price is consolidating above the wave? WAL, sure. So in general, let's talk about consolidating. Consolidation can come in a couple forms. One's going to be price movement range. What's the daily price movement range? And are we inside of that? That's a true volatility price compression. So that's the range itself of price itself. Then the other thing we can look at is what's the context of the market environment. You know what I'm going to say, structure before strategy. So the structure of this market is screamingly bullish. So what you have here is actually pretty rare, which is a buy the dip market that's consolidating. And so if it's consolidating above the wave, we know we're going to get green grab candles. And if those green grab candles have been play and are in place, as it is in this Western Alliance Bank Corporation, we're looking to the long side. So handling the entry, give yourself time. I would give myself time in a trend anyways, but my probably the strongest advice would be, well, I think hopefully it goes without saying, don't fight a trend. And I think the second part is because we're consolidating, we don't know unless you have an event that's going to likely trigger some movement. We don't know when that explosion, when that momentum break is going to happen. So give yourself the luxury of time. All right, Tesla. Tesla's a double green, pull back to the wave. Would I look to go long here? So I don't like to get preoccupied with why. Christopher, great question. I don't like to get preoccupied with why, but it would almost be silly not to at least mention what's happening in Tesla. Is something happening with production? No. Is something happening with sales? No. Is there anything structurally about the company that's creating this pullback? We know it's a tweet. We know it's Elon doing things that Elon does. I don't care why he's doing it as a percentage of his wealth, as a percentage of his. I was just watching a podcast and people were talking about the fact that this one particular person was talking about the fact that Bezos and Musk are net sellers in this market. And this is where, and it's a smart person, far smarter than I'll ever be. But what I thought was really interesting is anytime we want to talk about an owner of a company or insiders being net sellers, or maybe a fund that has a lot of Tesla, maybe it's an ARC conversation, right? But one of the things that's interesting is net selling is fine, but what percentage of their wealth, what percentage of their holding are they really taking profits on? And I think that matters. So when we think about what Elon Musk is selling, I mean, he hasn't called me to let me know. He doesn't write, he doesn't call, he doesn't even text. The structure's bullish. Most of the time, opportunities like this are going to be buying opportunities. But from where is the question, right? And yes, I think there's a buying opportunity here. But remember, until this narrative that is causing the pullback subsides or just becomes so old that we're inundated with it so much that we not only get numb to it, but it's been fully discounted. Till that point comes when there's no meter saying, oh, fully discounted now. He could tweet again. Who knows? But it's tricky because what we're trying to measure are the tweets of someone who's rather unpredictable. Would I want to bet against this company? I don't hate my money, right? So I would look to be long, but give yourself time and remember that this is most definitely going to be an interesting route back to the upside, which could be pretty swift. Who knows? This is like Han Solo at the helm of the Millennium Falcon. Yes, they could, absolutely jump into light speed at any time, but still it's Han. So keep that in mind. I like the long here, though. Structurally, I like the long. There's nothing really that I'm seeing. Now, we could get broadsided by anything. So let's bring up risk for a moment. Buying the dip has an inherent advantage over buying rips. Buying dips better than buying rips. And the reason for that is, let's think about if we're wrong. So let's say we build a position in this area. And let's say we're even willing to give the market to the 55 exponential to be wrong. Notice that our chasm for wrongness is rather narrow. And that's what matters. Whether this thing resumes the uptrend or not, I have zero control over where it's going to go. The only thing that I've got is control over what I can do. And if I can position myself in this area, I can be wrong fast. And I think there's wisdom in that whole fail fast. So the only thing I can control is where I would pull the trade. And so we're very close to that point of validity. So I think there's lower risk in that regard as opposed to buying on a surge through 1200, which I think is just, generally speaking, epically stupid. We're not doing that at all, right? So I love the timing that you're talking about. Really good stuff, Chris. Google, love the structure. Dip buys, 21 EMA. I'm down with that. I'm fine with that. Google is probably one of the better corners of the XLC ETF. And of course, Google is weighted with the S&P and the NASDAQ and so forth. Now, Facebook's a little different. Facebook has completed, and this is something that I know some of my mastery folks have been keeping an eye on. Facebook has completed a 1, 2, 3. And there's your Darvis breakout. Beautiful. And so because we have gone to a yellow underlying structure, the reversal is valid. This would not be a conversation of it's okay to buy had this still been red over red. This is why structure is so darn important. A lot of traders are very good at recognizing how to deploy a strategy, how to do it. But what usually is, look, how do traders turn the corner? And I've seen this both in myself, and I've seen this in the hundreds, if not thousands of traders that I've taught. Turning the corner in trading is not about memorizing, the strategy. It's really about how do you confirm the underlying environment, and is that a good match for the strategy, right? So as we like to say sometimes, let the lie of the ball dictate the club and the shot. We don't run out to the ball with our favorite club in hand with our preferred shot. Same thing, my fishermen out there, right? High tide, low tide, falling tide, slack tide, barometer pressure, temperature, water conditions, color. That's going to dictate the kind of lure that we cast and where we cast it to. So again, environment is always everything. It's everything situational. And I think a lot of traders think they need more and more strategies when in reality, they just need to be better at reading the situation. This is a good situation for a potential 1, 2, 3, down 1, 2, 3 breakout. And so I think that ultimately this has triggered here. I wouldn't be surprised to see a little bit of a pullback. I'd like to see a little bit of a pullback. And then this would be a long from here on out, as far as I'm concerned. And you might say, well, Rog, why not fade it? Because the trend that preceded it was down, because the overall tide is moving higher. So be really cautious with trying to short an individual stock, even if it's in a sector that's sort of wayward, when we're seeing the broader averages, the indices moving higher. And I think there's still a path of least resistance to the upside. So I hope that helps. Moving on to XLE. Love, love, love XLE. TT, yeah, this is looking at the... So, in terms of XLE, this is definitely bringing us back to Crude, which I know isn't doing much, but two things come to mind when I look at Crude. One, respect the trend that was, and two, never short a quiet market. And this is quiet. Blue grab candles, narrow range. If there is a possibility for movement, the probability to upside movement is far higher. And then that sort of then trickles into my bullish expectations for oil stocks, not just XLE, but XOP, OIH, etc. So TT, yeah, I'm having a good day. Ask me at 11:30. We'll be day trading here in the futures room in just a few. But no, I'm having a terrific day, right? Absolutely. XLE is a viable market on the dip, but keep it on that crude oil market for sure. All right, moving on to our next question, which is MU. This one's tricky. It's It's north of the 200. It's gone yellow. It's buyable, but this is where I would say, and of everything in a universe of stocks, we have a lot of them. YMU, right? So this is where different traders are looking for different patterns. There's no pattern here that I would say would sort of buoy MU to the top of a watch list that I'm keeping, whether it's a bullish watch list, bearish watch list, trend following watch list, chop watch list, all the different watch lists we can build. There's no reason for me to sort of catapult MU to the top of any of those for me. So it could possibly go double green pretty soon. It's above the 200, which is great, but there's not really much I can do with how it's behaving right now. I don't want to short it, but I don't know that I've got a great opportunity to buy it. Look, if you want to be a little aggressive and you're thinking, hey, MU could go higher, 200 propulsion, point of control, 74.05. Keep an eye on that level. All right. MPC. How you doing? Deborah? MPC. Was double green, yellow now. Definitely path of least resistance to the upside. Let's be more conservative about the pullback we buy. And, this is what I would say. And Deborah, I think you know exactly what I'm about to say. Use that ex-dividend date. Use the ex-dividend date as a catalyst for that pullback. And it doesn't always happen, but there's a higher probability that could be a catalyst for a little bit of movement lower. That's what we want to see. So maybe wait till that weakness hits going into today and into tomorrow. Just this week, let's see if we can't get the pullback with that ex-dividend date being the reason for it. But generally speaking, I like the long. Again, though, you know what I'm going to say. Of all the different stocks that are swimming in the tide with MPC, is MPC the best example of a market that's buyable? Is it the best double green? Is it the best structure? Is it the one that has the best respect for the wave, etc.? So, I think the question that really should precede every bit of analysis, every individual stock breakdown, otherwise the show would have to be 2 hours long, but the part of the analysis that must precede every symbol is, well, why that symbol? And I ask myself that all the time. Why am I interested in Wells Fargo or in Wells Fargo? Why am I interested in Schlumberger? Why are we in URA? Why that symbol? And that should really be the precursor to, all right, well, how will I trade it? A lot of times we just jump into how will I trade this without, and this is a big part of what we do in the mastery. It's a big part of what we do in terms of relative performance and structural differences that might make one stock a higher probability play versus another. So, but I do like that one. I like where it's hanging out. Okay. All right. Let's see. Sean, AMC. I'm just going to take that first symbol there on your list. AMC. Above the 200, there's always a chance that AMC goes into meme mode again, but I don't play meme stocks. I did one meme stock play in costs. That was it. And probably the only reason that it even ended up on my radar is a friend of mine used to be sponsored by costs. And so it's sort of, and it's just a familiarity hit me. And so it was in meme mode. It met the criteria for being a candidate for the meme crowd. And that was, way back when. But yeah, I try to avoid things like AMC or anything meme-like, but I will always say, keep an eye on volume, keep an eye on breakout levels. That's how these things typically behave. So thanks for the question, Sean. Amit asks, what are my views on crude, specifically the export ban? I I think there's a lot of news circulating in terms of the movement in crude. I think part of the reasons we're probably the reason, one of the reasons that we're so lethargic in the zone that we're in is probably situations like that. So if you're looking at some of the chatter about a specific market and it concerns you because it could basically be an obstacle to upside progress, or it could, worse, roll the market over, don't take the trade. But I can be long or nothing. So that's the way I look at that. That's my view. I can be long or nothing. And I think that's a really empowering thing, to let yourself say, well, you know what? It's okay to not have a view. And it's okay to say, I don't know. Now, in this case, I do have a view. I'm bullish. And I know that I can control risk by buying those pullbacks. As far as Intel goes, Kamal, I would say that we're looking at a potential 1, 2, 3. But what we're lacking is the yellow structure. So sure, we can keep an eye on a break through this area, but unless this goes yellow on the lower row, if we go yellow on this lower row, that is not going to be a valid pattern. So that's what I see there in Intel. So is there support forming? Potentially, yes. So not there yet, but forming potentially. Yeah, I agree. All right. So thank you as always for the questions. And I realize I did not get to all of them, but definitely I appreciate everyone being here. I think we covered Tesla, and I know there's a lot of questions about Tesla there. Let me just leave you all with this, because it will be pertinent to today's action. And I'm going to jump on over to the futures room here. I really want to stay below, ideally, the 55 on the euro. I like the shorts. We've been talking about shorts for a while in the futures room. Long dollar, short euro, same conversation. And so we're nowhere near the possibility for a short right now, but with what's on the agenda in terms of all the Lagarde and all the FOMC speakers, we could see a move higher. And if we do, as long as we stay below the 55 propulsion, I'm right as rain with that. All right. Okay. So that is it. And I will see you all tomorrow, same time, same station. Be good to each other, gang.